Stocks just keep on getting worse, guys. Check it out. It's currently about 11 a.m., so we're only an hour into the session, or an hour and a half. Sorry, guys, forgot about that half hour. And we have all the indexes in the red by a long shot, especially the S&P, the Dow, and the the S&P, the Russell, and the NASDAQ. Those are each down about 1 to 1.2%, and the Dow's not doing as bad, but still down 0.5% as the VIX is up over 7%. So, of course, in this video, guys, you know the drill. We're going to break down the charts here. We're going to focus on the indexes, go over what's going on, and we'll break down my thoughts, some stocks I'm looking at, overall where my head's at. So if y'all find value, smash that like button. Make sure to subscribe. It's free. And guys, don't forget to get up to 16 stocks for Moomoo, each up to $2,000. Link down below. And feel free to check out my Patreon if you guys want to see me build out my Patreon portfolio plus more. All of that's on Patreon. Link down below. And with that being said, cheers. Let's dive into it. So like I said, guys, this is not looking good right now. It's about 11:10. Well, I guess exactly 11:10 a.m. on the East Coast, and we have all these indexes in the red, continuing the beatdown, if you will, from post-Fed meeting yesterday. You guys probably remember we had the FOMC statement at 2 p.m. yesterday, followed by the press conference at 2:30 p.m. And really, ever since Powell opened his mouth, since that moment, the markets have been selling off, as you guys can clearly see here. SPY hit roughly, let's zoom in and see here, we hit 443 yesterday, right at 2 p.m. or right before that. Then the statement came out, then we dumped, then we actually filled the gap back up to about 443.50 before Powell spoke, which we covered in my video yesterday. And again, the second he opened his mouth, maybe not the second, but a couple minutes after he started talking, right? That's when the markets really started to take a hit, and we haven't seen a breather since that point at all, guys. I mean, at all. This thing's been down, down, and down, and you can see that that's been the case on the 5-day chart, so it wasn't just today and yesterday. This has been the case. Markets have been slipping for a couple of days, and, pretty much since the Fed meeting, it's been accelerating, right? That's what we're noticing here. We can see Triple Q, which tracks the NASDAQ. This is down 1.1%, the NASDAQ 100, that is. This is holding it was holding 369, 370 for 1, 2, 3, 4 days. So Friday of last week, Monday, Tuesday, Wednesday, we were holding that point, and then boom, Powell started talking, and well, now we're at 360, about $10 under that support. So clearly the bears are gaining an edge. Obviously the VIX is up 7%. We've covered before how the VIX is super low, or at least it was. Now it's getting to a more reasonable spot, although it's arguably still low historically. If I pull up the max chart on the VIX, guys, I mean, come on, we're still pretty low on this chart. If I make my face a little bit smaller, you guys can see we're right here. You guys see this? We're still at the bottom of this range. The top of the range, tends to be about 50, 35 to 40 to about 50 on the higher end when we get crazy volatility, right? And the lower end of the range is around 8 on the low end, 10 to 12, roughly to about 13. That's the lower end of the range, and that's where we were for quite some time. Now we're getting the spike on the VIX, 7.5% today up, which honestly I think is healthy, but still arguably not oversold, but still the VIX is still pretty beaten down. If we look here on the 3-year chart, I mean, it's still very low compared to what it was. So what do you guys think about the VIX? I mean, do you think we're going to get back to 20, 25 on the VIX anytime soon here? It's possible. It's possible, especially if SPY and Triple Q start to break this upcoming level that that I'm noticing here. Let me show you what's going on. Let's break it down and see here. So SPY on the 4-hour chart, guys, what we're now noticing is obviously we're under the moving averages. That should not be a surprise, right? We've talked about that on the channel, but now we're approaching the lows. We're literally at the lows right now, pretty much from the middle of August on SPY, and I believe on Triple Q, same time period, right? Let me see here. Let's see where this was, middle of August. Yeah, about 355, 360. So yeah, these are both approaching lows on the 4-hour chart here, not from a couple months ago, obviously, but from a couple of weeks ago. And we have a clear descending triangle on both of these ETFs, which, to be honest, guys, again, I tell it to you how it is here on the channel, how the charts are actually looking. This is pretty bearish. I'm not going to lie. This is pretty bearish. If SPY does end up falling through, let's say 432 to 440 or 433 rather, that little $1-2 window right here, the low from the 18th of August, this could be setting up for more downside, which honestly would not be bad at all for those that are averaging in for the long term. I mean, that'd be great. We want that. But it's going to open up for some more, let's just say, rockiness in the short term and more red, which honestly, could open up opportunity not only in ETFs for people that are buying for the long term, but also individual stocks for the stock pickers out there. There's been a lot, there hasn't been a lot of deals, or at least I guess in the space or in the industries that I've been looking at. Of course, there's always some undervalued stocks out there, but just because a stock's undervalued doesn't mean it's worth buying. You have to realize that. There's a lot that goes into it, but overall, I think it's healthy for markets to pull back. That's what we're getting right now. Obviously, Jerome Powell and the Fed spooked the markets. We all know that when he said that what did he say again? The soft landing, a soft landing is no longer a base case. It's obviously his, objective. He wants to avoid a recession. But it's not a base case at this point, right? And, that spooked the markets a bit to the point where, look, if SPY breaks, 434, I guess we're already under that point. But if we break 430, let's just say, I'll put my alert there right now. Mark is at or below 430. If we break that point, guys, we could be slipping down lower 400s, 415, 420, maybe lower than that. And if Triple Q starts to take out, let's see if I zoom in a bit here and draw out the descending triangle on Triple Q. If we start to take out, let's say, where would this be? About 355? Yeah, 355, which we're getting awfully close to testing right now. If we break that point, let me set my alert. We could be going, let's see here. Let me do my alert at mark is at or below 355. We could be going down to 338. That's a big spot. Let's see here. 345, 346, right? So, yeah, I mean, these are some levels that are realistic for the markets or for these ETFs to go down to. Oil right now is, let's see, is it up right now? Yeah, it's up 0.9%. So oil is literally the only green that I'm seeing out there. We have the metals down. We have, I guess the VIX is up, but the indexes are down. But oil's up, man. Oil's up 0.9, almost 1%. It looks like here it's continuing the trend on this 20-day chart. In fact, we're now breaking out of the moving averages based on, it looks like, today's price action. So that's pretty bullish if you ask me, guys. I don't know about you. Let me know your thoughts in the comments. And before we dive into some stocks and break down some charts, guys, don't forget to get up to 16 stocks for Moomoo. It's free money, guys. Use that link down below. Once you open up your account and fund it with at least $100, you get 5 stocks right off the bat. And fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks. And mind you, each of those could be valued up to $2,000. And guys, fund it with at least $5,000 on top of those 15 stocks for a limited time. Get on it. You also get a free share of either Google stock or Tesla stock, which makes this promo a no-brainer. So get on it. Use that link down below. And with that being said, guys, cheers. Let's talk about some individual stocks right now, which a lot of them are in the red, especially big tech, guys. Big tech right now is getting a beat down. We have, let's see, first of all, ARM Holdings. Did I not tell you that? ARM Holdings right now is down even more, 4.5% on the day, and they IPO'd about a week ago, whenever that was, at $55. It went to 70. Now we're at $50, guys. What did I tell you? What the heck did I tell you? This thing's down 30% from the highs, and who knows? This could be going down even more. So ARM Holdings, not looking good. Let me actually pull up Instacart or Maple Bear Inc., whatever you want to call it, the parent company. Instacart here, this thing is down, it looks like barely on the day, but overall it's down from $43, which was the high. Now it's at $30. Do you guys see what I'm saying here? Be very careful with these IPO stocks. Not saying that they're going to collapse to zero in the next month. They could bounce back for all we know, but there's a lot of choppiness when companies go IPO, and we've covered a lot of examples. When they first go IPO, a lot of the time, initially at least, stocks go down. Their stocks go down before they recover. Sometimes they don't even recover, guys. You have to realize that sometimes they don't recover. The all-time high could be the IPO price. I mean, guys, do you not remember when Twitter was public? I mean, do you not remember when Twitter was public? Let me see if we could pull the chart up here. Probably not, but I'm pretty sure they went public at like $50. They got to $70, and then by the time Elon bought them for whatever he did, it was under where the IPO price was, or right around where it was. I mean, you have to be very careful. I mean, Uber is another example that we covered that is nowhere near, or not nowhere near, but it's still right at the IPO price, and you'd think it should be nowhere near it in terms of it should be a lot higher, right? Uber's a great, successful company, but just because a company is successful, their product is awesome, you use it all the time, doesn't mean it makes a great investment. It doesn't mean that you buy the stock and you're going to get rich. That's not the case, guys. There's a bunch of great companies out there that make awful investments. You have to realize that. Awful investments. Not saying that that's the case with Uber, but just in general, right? Let's say, for example, what's a great company? Alibaba is arguably a great company, depending on who you're talking to, but does it make a great investment due to the CCP, due to all the political crap, due to everything going on? Probably not right now. Maybe at some point in the future when tensions die down, if they ever do, who the heck knows? But I guess that's a different kind of example. But either way, it makes the point, right? You guys know what I mean. You got to be careful. You got to be careful with stocks in general, right? The idea here is just because it's a great company, great product, doesn't mean it's going to make a great stock investment. And you have to realize, guys, another thing worth mentioning is even phenomenal stocks, phenomenal companies like Apple or Google or Microsoft, the cream of the crop, right? You can even buy those stocks and they could be bad investments because price is what you pay and value is what you get. So you can buy Apple and you're thinking, oh, I'm buying Apple. What could go wrong? But it's all about where you buy Apple, what price you buy Apple at, right? If Apple's at 300, but what the heck's Apple at nowadays? I don't even know, 180 or something. If Apple's at 180, yeah, it's a great company. You're going to have a piece of Apple, but it's not nearly as good of an investment as if it, let's say if it were at $100 or 120, it'd be way better to buy it at a cheaper price than at a higher price. So you have to realize there's a lot that goes into this, guys. Price is what you pay, value is what you get. Just because a company is a great company doesn't mean it's a great investment as well. You have to realize that. There's a lot that goes into it, and I'll leave you with that. If you enjoyed the video, hit the like button. Make sure to subscribe. Follow me on Twitter at Stas Talk Stocks. It's free, and I'll catch you guys in the next video.